What up, what up, what up, what up, YouTube? Welcome back to another major market breakdown. Last week we had a whole lot going on. I want to try to provide a little bit of clarity. What you have on the screen here was the entry that I set up on last week's episode. If you'll go back, you can check my work and see exactly what was said. But essentially, we were looking for this upside push. We didn't actually get the entry we were looking for, so I didn't actually trade it to the downside last week. But we ended up getting a push below these lows that I thought we were gonna get. I wasn't sure if market was going to keep selling off or not, but we actually did get a stop in consolidation here, which gives me a little bit of confidence that bulls actually do wanna take this level and push higher. We got a similar push from the same level here. I'm gonna be taking entries in this area, not as soon as market opens. I'd like to come back into this wick that we have here on the hourly chart here for Nasdaq and see if I can get an entry down here. But I think this will be to the upside. If this level here holds, my stop losses will be right below structure. Maybe yeah, like right below this structure. If this level doesn't hold, then it's definitely gonna be break loose to 22,800. But the pop that happened earlier in the week that we were looking well, I didn't know exactly that it was gonna be this news that was gonna do it. I was just looking at market structure. But Nvidia earnings came out good, pushed the market higher, but then it's more like reasonality about the earnings because like the earnings are great, but it's a lot of circular funding going on, and that so like people started talking about AI being a bubble and all that kind of market sentiment just kind of pushed Nasdaq and SPX and US 30 downward. As you can see with these fat candles here, but I'll tell you from my point of view as a long term investor, I don't believe that like AI is a bubble per se. Like it's gonna crash out or anything. I feel like it's more of a bubble like the .com. You know what I mean? Era. Like we're seeing the beginning of a whole new developmental stage. So like AI has a lot of growth, a lot of growth to be had. So companies like Nvidia, Oracle, Tesla, they're gonna continue to do well. The circular funding currently, I believe, is just to give the rest of institutions and investors and the regular everyday people a little bit more time to get with the program and start funneling in more levels of regular retail money and institutional inflows into those companies. Because right now, that's why they're doing the circular funding, because everything's like, is it? Yeah, you know what I mean? Like, is it really the future? It is. You know what I mean? Like, I'll tell you, like, I'm pretty good at sniffing out things that are not really gonna go anywhere. Like NFTs. Like, I didn't get involved with NFTs. Like, not even a little bit. I was like, no, that's not gonna last for very long. And lo and behold, they're 99% of the market is dead. You know what I mean? It's like there's a few NFTs worth a little bit somewhere, but it's I mean, who cares about an NFT really? You know what I mean? So it's like yeah, if I'm good at looking towards the future, crypto and AI have a very intertwined and long term future, and that you know any kind of like intermediary sentiment about it not being long term is gonna cause things like push 2% down in a day or whatever it was. It's gonna cause swings like that, but it's not like the market is done. Nowhere near done. I heard a lot of bearish talk in the last few days, like all of these stocks are way too inflated, and they are sort of inflated. I'm not gonna say they're not inflated, but like a lot of these big companies are inflated for a reason, and they're inflated because the future calls for. I believe the future calls for it. I have a lot of plans to get involved deeper with AI, tech, and robotics in the coming years. So it's an age that I plan on helping usher in. You know what I mean? So I got confidence in it. So it might be a little bit of a founder's bias there, but that's all right. Let's jump into DXY, where we usually start off to get a gauge at what's going on. Um, the dollar came back up into this area that we talked about before that was sort of protected. We got a major push off of it here. We got a push off of it here, and we're back at it. And I'm not gonna say it's gonna immediately push down, but I don't think that we're gonna get too far from this area. I like dollar upside is very limited. Like there. I know it's like a 40% chance of a rate cut in December right now, but I think that's just like, I don't know. I don't believe. I feel like it's a higher chance. It's a way higher chance than that. The market calls for a slight rate cut, 25 basis point cut, and it's like maybe one day I need to get hired on at the Fed because like I don't know. But there's other people that see the same thing. It's like the labor market isn't crazy, but it's not crazy bad, but it's not crazy great, right? And inflation is a little sticky. You know what I mean? That right there, that joint together, I mean, it simply calls for a slight rate cut just to kind of it's not gonna I feel like it's not gonna do too bad for inflation, but it'll help. I wouldn't say directly help the jobs market, but it'll help the money market itself. You know what I mean? And it's like, take it how you will. That's just my opinion on that. But the numbers are the numbers, and I believe that they're gonna give a slight cut, and that's gonna give a little bit of downside to the dollar, and I believe the dollar is probably gonna start pricing that in beforehand. So we're gonna start seeing the dollar trickle down a little bit. So whenever they do cut, it's not some like crazy push to the downside or nothing like that, because the market's gonna be pricing that in. But if I'm wrong, then we won't see the market start pricing that in, and it's just gonna continue to trickle higher. And then we'll just trade accordingly. But I'm looking for Euro USD buys this week. I'll tell you what. Wanda? Yeah. So we took a loss. We took a loss here because, I mean, stop loss. I put stop loss in private for one entry, got taken out, and then I had another entry floating, and then it hit stop loss, and yeah, that's where this is at. So just to be transparent, I take losses. I do take losses in this space, so you guys do understand it's not just winning all the time. We just try to take the bias for what it is. But moving forward, any push below these lows here, I'll take as a buying opportunity. Just like I said, I think the dollar upside is limited, and I believe that limitation extends to about right here. I don't think we'll get too much lower of a push on the euro than this. Now, if this, oops, I didn't mean to do that again. I hate when it does that. If this area does fail, then I'll just stop out for a small loss and be out of it. You know what I mean? Ain't nothing to it. I don't want to give y'all too much this week because it is a fickle week, and I would hate for. I know a lot of people just jump into trades, and just because, like, even though we tell you not to, you do it anyway, and it's like, it doesn't. It's not. Actually, let's check out this ERGP trade because that went well, and then we got stopped out in profit violently. We got two take profit levels hit. We got in down here. Stop loss and profit was here. I took some off the top here, and then we got taken out. Boom. I actually got taken out right here. This is when I was out. Price pushed back again. I was still in some entries, but I ended up closing a lot of them. But this right here, I don't believe is a fully finished trade. I think this was a good grab of liquidity because the ERGP is bullish at least over the short term. but we got sort of a bear flag created, and then it wiped a lot of this liquidity here. So any push down below this low here, I'll see as a buying opportunity. And then if we just start pushing higher from here, then I'll just look for a pullback from some sort of fib level. I'll throw it on here so you can see it. Um, Say it pushes higher, it comes up here ish. Oops, it keeps doing that. Say it gives stoppage, it makes a top right there. I'd wait for a pullback to about right here and take it higher, something like that. I love a good between 50 and 60% retracement. That's my golden zone. I know people ask me what fib levels do I like the most. It's the area that's between the 50 and the 68, 618 whatever percent. That's my golden zone. I'll put it on here so you guys can see it again. Like this line right here. Boom. That's the golden zone right there. Now, like this is the top. The top of the zone is usually okay. Like it varies per pair. The top of the zone is usually more likable for like indices, things that you don't want to pull back too much because then that means it's kind of losing momentum. But with like Forex pairs, like give me that full almost 618. You know what I mean? Give me the best entry possible. But we like this divergence built up for this little these tops here and these tops here. So that divergence built up, that bearish divergence built up and then cracked right here, right? So now we're looking at, clean chart. You know what I mean? Now we're looking at a clean chart. You know what I mean? Because the fundamentals are for bullishness, but the technicals were screaming a bear move, and a bear move did happen. We got some buys, we got made a little bit of money, but a bear move did happen, and now that it's done, we can look for more bullishness. So like I said, any push below this low I'll like, but if it just decides to push higher from here, I'll just wait for a retracement entry. And that is what I will leave you all with. Well, actually, hold on. Let's just take a look at Bitcoin. I did like 2 videos on it this week. I took a loss. Another loss. Listen, I'm gonna be transparent about the L's. Closed for a small controlled loss up here because I was under the impression that the 94K level would be protected, and it didn't get protected. But my account wasn't wiped out completely. I didn't lose thousands and thousands of dollars. No. Well, I mean, on one account I lost a couple thousand, but it's not like it was $100,000 account. 150. It doesn't drop in the bucket. You know what I mean? It's not when you're managing risk well, then it's all a bit of a drop in the bucket. Now I can say that down at these levels though, right? We do have some very, very slight, ever so slight, hidden bullish divergence. All right. Now, does that mean this right here is the level? This is the bottom? I'm not calling the bottom. I'm not saying this is the bottom. I am saying that you can start looking for some opportunities down here. With this much, I mean, we are on the hourly time frame, right? With hourly hidden bullish, then it's reasonable that if this decides to break this swing high here, let me put a line there so you guys can really see it. This decides to break that swing high there, like with a little bit of momentum, strong candle, with a little bit of space, comes back and the level holds, I would buys. I would then like to take buys higher. But that's the scenario. That's the scenario. The only scenario I would buy in from here. Um, Price, comes up, rejects it, comes back to the bottom. I want to wait. I want to see if this level down here actually holds. If the bulls are actually gonna come back and really, act right, because of the fact that I believe that a lot of this is like profit taking. You know what I mean? A lot of folks that have been in for a while take some money off the top. You know what I mean? That's all. That's all it is. And just like I mentioned earlier with AI, Bitcoin's in the same realm. We're still on the earlier side of Bitcoin and cryptos and blockchain as a whole. When it's too late is when your grandma fully understands it. You understand what I'm saying? It's when it's too late is when your grandma fully understands it. All right, your grandma don't know what a blockchain is, man. You good? Y'all got some time. Y'all got quite a lot of time to understand it. Get invested in the right ways. I'm not gonna say that like a big chunk of my net worth will ever be in crypto, but a chunk, reasonable chunk. You know what I mean? Like a small mid-sized chunk, of my net worth has been in cryptos for almost a decade. You know what I mean? So I put a lot away a long time ago, but they're starting to do some more regulation, and that's also part of this downside. They want to tax overseas wallets somehow. I saw. I gotta look more into that. I don't want to just be trying to scare anybody or anything like that. It's not definite, but I think they are. Some folks are trying to put that forth. Will it become a thing? I don't know, but I would like it not to become a thing because, nah, y'all can leave that alone. You feel me? We don't really want extra regulation in the crypto space. You know what I mean? And that's not to allow any nefarious activity. It's just like kind of going against what it was built for. You know what I mean? If you over-regulate it, you know what I mean? So it's just like, let's respect Satoshi. You know what I'm saying? Let's just respect Satoshi, all right? If y'all got some value out of this, make sure you hit the like button and subscribe button, bell icon, throw something in the comments. All of that, it helps the algorithm. It tells it this is great content. It needs to get pushed forward. The last video got a very small amount of views. I don't know where everybody is at or what's going on. But you guys need to get tapped in because we don't miss too much. You know what I mean? We don't miss too often. And then if you haven't already saved this to your home screen, let me go ahead and go over here. If you haven't already saved the bird's eye tool to your home screen, and you're a day trader or swing trader or scalper or any type of trader, then you're missing out and you're shooting yourself in the foot, because every time you take a trade, you should know where the momentum is going based on institutional and retail sentiment currently, based on inflows and outflows and the strength of the asset currently. All those things combined is all this right here on your screen. It's very simple. All you do is go over here, you type in whatever pair you're looking for, you hit check, and it's going to give you a momentum read. So right now, the market's closed, neutral momentum detected. But, whenever it gets into one of your areas of interest, one of your potential entries, come over here and check the tool and see if the momentum is in your favor, all right? I love y'all. Make sure you're kind to somebody today. I'm going to catch y'all on the next one.